In this video, we will analyze if Xcn coin will rise from this price. Please watch until the end to not miss anything. The chart for Xcn has a distinct downtrend extending from the top. This trend line shows that the price has been moving downwards for a long time, and the market is dominated by sellers. As long as the price stays on the lower side of this falling trend line, the market will be generally bearish, and buyers will remain weak. Such downtrends usually indicate that the price encounters resistance at certain levels and struggles to break through it on each of its attempts. If the price approaches this trend line and is rejected, the downtrend is more likely to continue. But if it breaks this trend, it will begin to rise after a retest. And on the chart, there is a strong bullish order block on the lower side of the level where the price is located. This area is notable as an area where there was a lot of interest from buyers earlier, and the price moved upwards. Bullish order blocks are one of the critical levels in the market where large investors and institutional buyers take positions. If the price moves down to this bull order block, there is a high probability that buyers will step in. Usually, such zones are the areas where the price takes a sharp reaction and makes an upward reversal. Therefore, one should carefully watch how the price reacts when it reaches this level. If the price hits this area and gets a strong reaction and support from buyers, a new bullish wave may start from here. However, if the price fails to find enough buyers at this level and slips below the bullish order block, the fall may deepen further and the price may test lower support levels. Remember that the more an order block is tested, the weaker it is. And on the chart, there is a strong bearish order block on the upper side of the price. This is an area where sellers have been heavily engaged in the past and the price has been moving downwards. If the price moves up to this bear order block, there is a high probability that sellers will re-engage. Usually, such zones are the areas where the price may encounter strong resistance and get a downside reaction. Therefore, one should closely monitor how the price reacts once it reaches this level. If the price hits this zone and pulls back under pressure from sellers, it could be a sign that the decline may continue. However, if the price breaks through this level and makes a sustained breakout above it, it could mean the beginning of a strong move to the upside. According to the Elliott wave theory, waves in price movements are formed in a certain order, and a 5-wave bullish or bearish structure is usually observed. Looking at the structure seen on the chart right now, the price has formed the first wave, but has not yet completed the second wave. The first wave is usually an area where the market establishes a new trend, and the first buyers come in. At this stage, the price made an upward movement, and market participants started to notice the rise. However, according to Elliott theory, the first wave is usually followed by a correction wave. This correction wave, the second wave, occurs when some of the traders take profits, or the price regains strength for a healthy rise. Since the second wave has not yet formed, the current movements of the price are critical to understand whether it will start to make a correction wave or not. After making the second wave, we can measure the third wave with Fibonacci. Another notable structure on the chart is the descending channel. Such channels are usually formed in downtrends, and the price fluctuates within a certain range. Currently, the price is near the middle band of this descending channel and is making an effort to break above it. The middle band of the descending channel often works as an important resistance level. If the price is able to break through this level, there is a potential for a rise up to the upper band of the channel. However, if the middle band cannot be breached, the price may face downward pressure again, and there is a possibility of a pullback towards the lower band of the channel. If the price tries to break above the middle band, it could be a sign that the bulls are gaining strength in the market, and if it breaks it, it will move to the upper band. There is a noticeable W pattern formation on the chart. The W pattern is commonly known as a double bottom pattern and is considered a reversal signal. For this pattern to form, the price needs to make two bottoms and then make an upside breakout. Currently, the price is moving towards the second bottom. This could be an important support point where buyers could step in and pull the price up. If the price gets a strong reaction here and starts an upward reversal, the W pattern will be completed and will give a positive signal for the start of the uptrend. And also, if it crosses the BP line, its rise will accelerate. When we look at the Bollinger Band, we see that the price has previously risen up to the upper band, and after touching it, it experiences a retracement. The upper band of the Bollinger Bands is usually considered the overbought zone, and a correction move is usually seen when the price hits this zone. At the moment, the price has pulled back to the middle band and is trying to find support here. The middle band of the Bollinger Bands usually acts as a dynamic support or resistance zone. If the price can hold at this level and get an upside reaction, there is a possibility of a rebound towards the upper band. However, if the middle band support does not work and the price breaks it to the downside, then there is a higher probability that the price will fall to the lower band. If it holds at the middle band, it will try the upper band. Looking at the MACD indicator, there's currently a downside crossover from the top. This is usually considered a sign of weakening momentum and strengthening bearish sentiment. When the MACD line crosses the signal line from top to bottom, it indicates that the market has switched from bulls to bears, and selling pressure is increasing. But there is no need to worry. It should already make the second wave as the Elliott wave. After that, it will turn its direction up again. Looking at the RSI indicator, we can see that a downtrend was formed earlier, and the price got confirmation by retesting after breaking this trend line. The retest is usually an important step in a bull market, confirming that the uptrend will continue. The reason why RSI trends are so important is that they are a powerful indicator of the market's momentum and balance of power. If the RSI is in a downtrend and the trend breaks, a similar breakout in price action is usually expected. This is because the RSI is an oscillator that reflects the speed and strength of the price. If the RSI continues to rise, especially after a retest, it indicates that the market is gaining strength and the price is more likely to move upwards. That's why I don't talk about RSI trends for nothing. RSI trends are important. Looking at the vortex indicator, we see that the blue line is at the top. This suggests that the bullish pressure is strong and the uptrend continues in the market. When the blue line is above on the vortex indicator, it usually means that buyers have taken control of the market and the price is more likely to move upwards. One of the most important features of this indicator is that it shows early signals of trend changes. If the blue line stays on the upper side for a long period of time, it signals that the uptrend is firmly in place. However, if the blue and red lines are moving close to each other, then there is a possibility of market indecision and a change in the direction of the trend. In the current situation, the blue line is on top, indicating that buyers are still dominant and the uptrend is likely to continue. And if the blue line moves higher, the uptrend will accelerate further. The price is currently touching the 200 EMA and pushing hard to cross this level. The 200 EMA is considered an important moving average level that usually indicates the long-term trend of the market. A close above the 200 EMA usually signals the start of a strong uptrend. Tests to this level signal that the pressure from buyers is increasing in the market and the price is interacting with this level. If the price manages to cross the 200 EMA, this usually indicates that the uptrend will continue and the price will start moving higher. A break above the 200 EMA usually indicates that the market is in a bullish trend and buyers are taking control of the market. This type of move can be a buying opportunity for traders, as further bullish movement can be expected once the price breaks through this level. However, the effort to cross the 200 EMA may not always be successful. If the price fails to break this level and retreats back below the 200 EMA, it could signal a weak bull trend or a potential consolidation process. But if it manages to break above it, we could see some nice upside. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.